Withdrawing money from an RRSP or registered retirement savings plan results in the following. 1. Taxable income. The amount withdrawn from your RRSP is considered taxable income for that year. This means that income tax will be levied on that amount. At the time of withdrawal, the financial institution will deduct withholding tax and remit it to the Canada Revenue Agency (CRA). The withholding tax rate varies, depending on the withdrawal amount and your province of residence. Up to $5,000, 10%. 5% in Quebec. Over $5,000 to $15,000, 20%. 10% in Quebec. Over $15,000, 30%. 15% in Quebec. The withheld tax is treated as part of your total tax liability for the year. Therefore, you may have to pay additional tax when you file your income tax return at the end of the year, or you might receive a refund. This depends on your other income, tax deductions, and tax credits for that year. 2. Reduction of RRSP contribution room. The contribution room for that specific RRSP is permanently reduced by the amount withdrawn. In other words, the space to recontribute the withdrawn amount to your RRSP is lost. This means a reduction in your retirement savings that could have benefited from compound growth. 3. Loss of tax benefits. RRSPs are savings plans that offer income tax deferral benefits. Contributions made to an RRSP are deducted from your taxable income for that year, reducing your tax burden, and investment income earned within the RRSP is not taxed until it is withdrawn. Withdrawing money early means losing these tax benefits. 4. Exceptional cases. Tax-free withdrawal. Home Buyers Plan, HBP. First-time homebuyers can withdraw up to $60,000 from their RRSP tax-free to purchase a home. The withdrawn amount must be repaid to the RRSP within a specific time frame. Lifelong Learning Plan, LLP. You or your spouse can withdraw up to $10,000 per year to a maximum of $20,000 in total from your RRSP tax-free to finance education. The withdrawn amount must be repaid to the RRSP within a specific time frame. 5. Other considerations. Early withdrawal from an RRSP generally negatively impacts your retirement savings goals, so it should be considered carefully. If you inevitably need to withdraw from your RRSP due to an emergency or other unavoidable situation, it is advisable to consult with a financial advisor to minimize the tax implications. You must convert your RRSP to RRIF or an annuity by December 31st of the year you turn 71. In summary, withdrawing money from an RRSP makes that amount. Taxable income subjects it to withholding tax and reduces your RRSP contribution room. However, tax-free withdrawals are possible under the Home Buyers Plan or the Lifelong Learning Plan. Therefore, RRSP withdrawals should be carefully considered, and it is generally advantageous to keep the funds invested until retirement if possible. So that's it. Subscribe, like, and hit that alarm bell.